Yeah, so let's look at gold analysis. So we've got a 15-minute chart, really interesting. The bigger picture. So yesterday we went up to the 618. We started and stalled. You can see all of this here. You can see people like this when it does this. People like to get involved in that, don't they? To short it back down because it's clearly rejecting. And so then it drops. So we had this drop, and then we went up, and we left, like I say, an anomaly in terms of price action on the smaller time frames. It left me a marker there around 17.99. So price did that in terms of a retracement. It did a 764 retrace of this move. So it did that because it went up so sharply. I shorted it off the 764. I didn't even question it. I was like, right, yeah, it's getting. Started taking some fills here as it was going up to this area to get in to make sure I got it, because I knew that it was going to come back to this level. Because like I said to you, it's like this. You know, when you've got this price coming down, and all of a sudden you have like these candles that don't correspond. Like here, this is a good one. Actually, this is good because you've got. You can see price would want to come back down to this area, maybe to test this area. Why? Because what we've got here on this candle on a 15-minute, for example, is a bearish candle, and we've had completely rejected, which is manipulation. It's completely just forced it up, and it's maybe left a marker, if you like, that at some point it's going to come back and just tap this area and retest it. And there's no I don't really have a way of explaining it. I guess it's just experience. When you see it with your eyes over a period of years, you see price action. It's just basic price action. There's nothing to do with anything like fibs or anything else. It's just the way candles close. Of course, I wouldn't take that because of 15-minute. I wouldn't just take that as a confluence, as a main confluence, but I would include it. But then I would also want to, and this is why I have multiple accounts with multiple brokers, and I will use multiple charting packages. I will look at that and see how it corresponds with, say, I don't know, a 15-minute chart on my other charting software, and see if indeed it was the same sort of close, if you like, the same sort of price action. So if I was to just look left on my chart and just see why price would come back down to this level. So anyway, I had that there on a smaller time frame on like a 5-minute chart. I had the same sort of thing, so it made for a good target. And it was perfect, pretty much. Because what did we do? We rejected, and then we went all the way up. So that was done. Now we've gone up, and we've retraced fully. When you look at the fibs of the last range, taking the last low, the lowest point, and taking the last high. Why did that not pin on there? Oh, that's annoying. There we go. We've got a 764, pretty much at 1807. So Asian session pumped from where we got out. Interesting. 764 strategy, short it, and even with the price action being so accurate in this respect, like I just showed you here, even if you miss that first entry, because that's the Asian session, what you sometimes find is this is Asia coming off the end of Asia at 4, 5, 6 o'clock. What does it do? It pumps up for another go, and we get a 764 entry off there. So even if you didn't get in off here, it's gone up and done a whole wave 1, wave 2. So wave 1, wave 2 pull back to the 764, and then with momentum. So take that last low. Let's have a look at this. Take that last low. Let's go like that, because I don't think I did that before. I think what we did was we just focused on this where it initially pumps from. So we could do that as well, where it initially pumps. It becomes a little bit subjective, but I always want to see where the ultimate low is of this range. So let's have a look at that. So we've gone up there, 764 strategy, down to a 382 pullback of that last move. Makes sense, that's quite nice. Even if you took some money there, it's like 30 odd pips. Goes up 764 of that range, and then drops again. So you want it to break with a bit of MT strategy to see it pierce on down through. And look at the MT, the volume here crossing over. You want this to cross over to give you confirmation of bearish price action. This is a 15-minute chart, mind, so I don't know what it looks like on an hour. I try and look at it more on the high time frames. This just looks like it wants to get down to that 764, down to 96, which would tie in with that area I was telling you about just earlier. I was just showing I'm just looking at it on my other chart on the 15 minute. Let's just have a look at this. But yeah, it's a shame really. If I'd seen this a bit earlier, I could have maybe gotten you in on this, or looked at sharing this setup with the group, because it's pound gold has remained quite bearish, quite subdued. Every time it's gone up,
Yeah, for like the whole month, really.
yeah, it just it just stays down. So yeah, if I look on my charts, that 15 minute chart I was just showing you, we do have that same sort of price action. Very very strange, where we've gone up and then it's pulled back, tried to go down, look bearish, and then attempted to go with the bearish flow, and quickly was snapped up and snapped. It's bit that area there. Very I don't know what's the word. Anomaly. Anomaly. I like that word. Price action. It's not. It's not. It looks like manipulation, doesn't it? We've had, and especially that. That's blatant manipulation. It's just pumped it right up. You can argue that that is range bound, and it's gone up to retest that high, which is why immediately then when you've got that, that's why I put my 764 on there, or did that, and thought if it gets to 764 around 02, I'm shorting it back down to 99, and it's just again, why did I do that? It's just confidence and just understanding price action and just seeing it over and over and over and over and over years and years and years and years. So that's all done. Let's get rid of that. We're well in there. It's a shame we couldn't get involved in that. Yeah, you can see it printing down. Even whilst we were speaking, you can say if it crosses over my magic line, we could aim for 96. Was it 96.95? So that's 97. It's only about 10 pips. I don't know, we'll see. Might be now that we get some movement anyway. It might just snap back up because we've got the US traders coming in, so we'll see what they want to do. But certainly I would look for it to tap that 764 along with the fact that we've got this last bit of strange looking, these wicks, bearish, and all of a sudden it just reverses. So come down, even just to come down to just slightly above the 764, just a tap. Let's have a look. Actually, yeah, that is resting on the 764. So it would need to come to the 764. Tap it. I think it's going to get there. I think that's what we're looking at. It's kind of 5 minute. What's it look like on a 5 minute? It becomes very noisy and you don't actually see it, but it does show. What do you call this? An order block? Demand zone?
Yeah, I would.
Yeah. So yeah.
Mhm.
So you can see that the way I look at the markets and the way that we think about things and see price action. I've for long periods I've never really looked at putting labels on things, but I think over the last year or two, I sort of pay attention to what people call these label. They put labels on, because I think if I'm sharing my information, then I think you need to put labels so people can know what it is that you're talking about. You just say, well, over here, like people like I don't know, there's certain gurus out there, people like maybe Sean, for example, other people which they seem good at their trading, but what they do is they always show like a chart with nothing on it. They don't really explain why they're taking that trade. They make it look all like magical and mystical, and it's like and it's just be like, oh, they've just walked in, rocked up one day, and thought, oh, I'm going to just buy it there, sell there, which is great. That's pretty much what they are doing, but there is a reason why they're doing it at that level, at certain levels. I just want to make sure that I'm deep diving and putting in some detail and saying, right, well, the primary reason why we would target the 764 is because it works over and over and over and over and over. Now with the Discord, I'm putting in this, I've made a little strategy category, so I'll start putting real life examples in there so you can see it play out over and over and over again. And also, what's useful about that is, in terms of a confluence, everything else then can play a secondary confluence. Looking at things like here, it makes for a really good target, doesn't it? 97. If you were shorting from up there, you had good reason to short from up there. Why? Well, there's no necessary. What's this? Could you argue that that's an order block? You can see some demand there, I suppose.
Was that? Yeah.
See, for me,
Breakup block because it broke structure.
So here could it not have gone, price could have dipped into this area, which it could have done, couldn't it? It could have dipped in up to here somewhere, 08, and then dropped. which would be great. You know, you start putting little purple blocks everywhere, like me, they don't have to be purple, obviously, but mine are like this.
Yeah,
You know,
that's the
and
only
start.
thing about them is that you don't want to have that if you your chart can get very messy if you start putting them all on.
Yeah,
So you just want to have certain high probability ones more
sure,
say like
sure.
maybe you go down from your you do your top down and then you try and see if
If it
your monthly
corresponds,
ones if
yeah, yeah.
yeah
and
literally if it
and then you've got to sort of
corresponds.
so you can be it can be a little bit subjective, which is understandable. That's what trading is. And you start picking some levels, and you think, okay, it might react at this level. It looks good for it. If it does, then I'm shorting it, etc. I mean, for me, I don't have to worry about that. I have the luxury of using fibs as my primary, so I believe in them, and rightly so. I mean, above all else, what happened here? Uh, okay, if we start drilling down to past the decimal point, 37, 49, what's that, 1 pip roughly? So 1 pip difference. In terms of precision, sniper entry, it doesn't get much better than that really. That's on point. You know, I don't have to rely if but maybes on going into a zone or etc. If it does, great, wonderful. And sometimes it will. Sometimes it will shoot on past. But that's perfect. If I take this another level more, straight away I'm just looking at something that I'm thinking, okay, this looks interesting right here. Let's just do away with that and just show you where everything swung up from. So if we maybe start looking at fib extensions, maybe like that, or maybe looking at something like that in terms of the last swing high, swing low. Just looking at how when it breaks a high or a low and extends straight away, we're extending. So when it starts looking at extending, then that interests me because I then look down here to see if there's any divergence. And again, you can see this 15-minute chart, but there is divergence because that is the volume. There's the first wave. The second wave, it went up and extended,
And
but the
it's lower.
second, yeah, it's lower. So we do have slight divergence. Is that enough? Well, it's enough. If you're intraday trading, it's enough. And with everything that's going on, the conditions, the market conditions, the time of day, summer volume, it was enough. It was enough to pull this back down. But first and foremost, my main strategy is the 764 strategy, and that just works. I mean, we look back at the last range. I mean, look, we've come down, we've tapped it, gone off. We've had another go at it. It starts getting a bit cranky. What time is that? That's the Asian session at 3 o'clock. So then it came back and gave the London session another chance, another opportunity. If you miss that one, have another go at it. Because the Asian session is probably less volume, isn't it? So they've had a little go, but this one was the real go when it started really having a go. Maybe even the US traders probably had to wait till the US. Yeah, 12 o'clock, 12:30. US traders come in and they showed us how it was done properly. So this was a decent move. But you could have still made your money by sort of 9 o'clock, 8 to 9 o'clock. The rule is enter a 764 strategy, entry point, hits the 382 as your T1, a 382 retracement. Bosh, done it, come back down. And then the US traders come in, but by which time, you're done. It's all there's so much method to it just by applying some fibs. Again, you can apply these order blocks and everything else as a secondary measure, and they seem to work for people. It seems great. One thing that concerns me,
Even when you just
yeah,
put your fibs on and you find your range and then you look for your 764 and everything, you just by plotting your range you can then see what's at the 764 and you'll see okay there's an order block right there.
yeah,
And you
that's
can then
good
sell that easily. Yeah.
that's nice as an added confluence because we are looking at confluencing. So we're trying to layer on top of things. We're trying to put layer upon layer upon layer in terms of support and resistance, so that we have. It makes for good targets. It makes for good levels to buy and sell off and to and from, doesn't it? So yeah, it's good, interesting. But you can see that this is why this is what works. Park everything else. Forget what people talk about institutional trading, blah blah blah. We're talking about technical analysis, and we're talking about doing something that is within reach and freely available. We're opening up the market space for everyone, anyone and everyone. It doesn't matter who you are, from what walk of life. It doesn't matter. You can come in and you can make money. You don't have to have a degree in banking and finance. You don't It's
Right.
not necessary. I think people want to overcomplicate that. It niggles me a little bit because I just think you're overreaching and you're going into on irrelevant. You're looking to. It's great to learn it. Get a book, do some googling, watch some videos, understand institutional bollocks and all the rest of it. Great, fine. But is it going to work for you or serve you? Is it relevant to you? I don't know. For me, it's not. What I've done in the past and what I do now is completely different. And what I did in the past and what I do now, both times they didn't really require much effort. This doesn't require much effort. You put some lines on a chart and you buy and sell off those lines because those lines tend to be really, really accurate. And here, look, enough said. Here, enough said. Really, it's just so yeah. All good. There you go. All right, that's my take on gold. Let's put some targets on there. So down here, and then once it's done that, maybe can we just get down there a little bit? I want it to get down there. 97. Let's look for 90. About 97. If we can tap 97, what it might do is just tap it and go bosh, and then it might rally. So what we'll do is we will let's get rid of that because that's done. Let's keep that on for the moment, and let's look at potentially something like something like that. What am I doing here? No, that's wrong. That's the wrong way around. It should be like that. Sorry, my apologies. Let's go. It might be something like where it gets down to about there, for example, and then that way we can start targeting back up. Because if it's going to be range-bound behaviour, I'd anticipate it going like that, and a break of the 38.2 might give you somewhere like
MT back up.
Yeah, MT, break there, get that volume going. But of course, I did say from May, start looking at targeting the 38 as a T1 rather than wait for it to get there. Take the money off there. And when it gets there, then it can think about what it wants to do next, because it might just do that and then do a little cheeky U-turn back down first, because gold can do that. Again, depends what you trade in. Understand how much it can move and how it likes to move, and summer volume and everything else. Look, it's even struggling to get down there. It was only like 10 pips. Could have just tapped it and then gone up. But it might just be annoying and might find that this is a good reason to find support here and go up. I mean, certainly I had it pegged as a level. So if I was selling to this level again, I did it there, made my money. I could have sold it again down to here, made my money again. Could have done it there, sold my money, made it there. It's 1, 2, 3 times so far. Just as a level that I've highlighted, works a treat, ended up being powerful. But that's often the case because you just start reading price action in a way that others don't fathom, can't really get it. How are you how are you looking at that? How did you come up with that area? But then that's it. You do a little deep dive and do some analysis, break it down, and start looking and thinking, okay, yeah, there is a reason for why it might stay there. You could make it. You can make anything fit in this business. I think that's why people are skeptical.
Yeah.
It's good to be skeptical and question things, but don't question these fib levels because they are working undeniably. This level works, and it works time and time and time again. Just roll with it. Don't question as to why. Just it's there. It's a level. Buy and sell off it. Make your money.
Yeah.
Start making £1,000 a day and. Don't grumble or question it. It's fine. Some things don't need to be questioned. It works as a phenomenon.
Yeah, I think what almost that can be an issue for people as well. Like, it's almost unbelievable how easy it actually is when you get down to everything that you're like, wow, was that actually all I had to do? Now I just have to sit on my hands and.
I know it's bad, isn't it?
Anything.
I know. I'm the same. I always try and finish the statement with, but don't take my word for it. Back test, forward test for yourself, and just see if what I'm saying is a load of bollocks or if there is some truth in it. And if there is some truth in it, what do you want to do? Do you want to monetize it? So then when you narrow it down and when all is said and done, it becomes, you can refine it into a 3-step approach, a 3-step program, which is let me see, I've got it written actually. I did write it. I think this is it. Step 1 is take time to learn, master all 3 of my strategies. They work extremely powerfully together. You can see how they work. You know, learning one is good, so the 764 is okay, but that's only like a third of the picture, isn't it? 33% of
Right,
seeing the whole
right,
bigger picture.
right.
So learn all three, and you know, maybe study one a month, for example.
Mhm.
Really get your teeth into them, because then when you pull them all together, it's unbelievable how they work. We had two play out yesterday on the pound dollar. We had Divergence and the 764. Two out of three. That was enough to make some serious money off that, shorting it yesterday. It was fantastic. So I came in yesterday, made my money, job done. It was great. I was looking, had it broken the 33, which it didn't quite tap, let alone get down there. But had it done that, then we could have been looking for a deeper selling. But it had other ideas and it rallied. But there was still powerful. So it was still really good. Step two is back test or forward test them, build confidence and understanding. You know, and that part there, it sounds straightforward enough, but some people, well, most people, I should say some people, a lot of people that have come to me, they can't be bothered. They're just either too busy, they've got a job, they've got other distractions in their life. Some are just too lazy, you know. So
Mhm.
they want to spend a million, but they don't want to make the million first. They, you know, everyone knows how to spend money, but you know, ask questions, share your charts and trade ideas relating to the three strategies to help reinforce your foundation. I said it to everyone. I'm happy to support people. If you are taking my work and you want to learn what I'm doing and how I'm doing it, I'm quite happy then to support you, because you are wanting to learn what I'm sharing, and so I will respect you for that, and I will help you accordingly. And then step three, simple, monetize. That's it. 3-step approach, job done. You know, that's it. So